Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, November 28th, right after the markets close. And as you know, the market closed today at 1 p.m. Eastern. Well, Wall Street's main indexes opened higher today and traded higher with futures trading springing back to life from an hours-long CME group outage that had temporarily frozen currencies, commodities, and equity contracts around the globe. So they got that fixed. Investors will look in the coming week for signals about profitability for artificial intelligence companies, as well as the broader economy's health. So on that note, let's go on to three charts that could give us some insight into the week to come. As we always do, we're first going to look at a daily chart of the S&P 500 Spider, symbol SPY. Of course, this is the ETF that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $682.21, right at 68.22 on the S&P 500 itself. The SPY, as you can see here, is trying to get back to its October high. Back here, the all-time high was back here at 690. So for the past few weeks, it's been struggling to get back to that. Now, this past week, the SPY also climbed back above its recent lows at, see down here, this was a low that it made right at the end of last week, beginning of this week. So the SPY fell down to these lows here at 652, but it managed to climb back up finally this week above its major moving averages. The red line is the 20-day moving average coming in at 672 and change. The green line is the 50-day moving average coming in here at 670. And of course, we can still look down here and see the 200-day moving average coming in at 616. So these are numbers we like to keep at our elbow to look for potential support and resistance. Now, we do know, you can't see it on this chart, but we do know that earlier this year, in April, the market rolled over and the SPY dove to its April 7th low at 482. Then it rebounded nicely, and as you can see, this chart starts back in May. The SPY jumped up over its 20-day moving average, the red line, and pretty much walked up, except for a few little drops here. It walked up that 20-day moving average all the way up to this October all-time high at 690. So it was really actually pretty amazing. From here up at 690, it fell back down here, as you can see, to the 50-day moving average. From there, then it rallied back up here to 685. Then it fell down here to this low at 652. It found price support here. Look up and say thank you. It found price support here at just above at the October low here. So that was a good thing. It found price support there, then rallied, as I said, in this past week, back up here to where we are at 682 and change. So going forward, well, what's going to happen next week? We are going to have some earnings out, as I said earlier, from some AI companies. Of course, all eyes are going to be on the Fed, trying to see what they're going to do for the December meeting. Are they actually going to lower rates, as they kind of indicated? So that will be also a big question mark next week. So next week, as I said, going forward, we do have, if we're looking for the movement in the SPY here, we do have potential resistance at 685, and again, of course, up here at 690. We do have support here, potential support at the 20 and the 50-day moving averages, again at 670 and 672. Then again, down here to this recent low, which is an important low at 652, 653. Very important low there that we want to keep an eye on. Then we have the 635 here is a potential low from earlier. We've got the August pivot here at 619. And of course, we've got the 200-day moving average come in at 616. So plenty of potential support should we need it. And know with me too that December and January are usually positive months for the market. Actually, so is November, but we were up so high in November, the market was pretty well overbought at that point during the last month. So December and January are usually positive months. No guarantee, but it's something to think about. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the exchange-traded fund that closely follows our NASDAQ 100 index, which is the top 100 non-financial stocks in the NASDAQ stock market. And of course, that includes the Magnificent Seven, Meta, Amazon, Alphabet, Apple, all of those. Now, when I captured this chart today, the QQQ, we're trading at $619. They're down from this October high up here. At the all-time high has been up here at $637. When we look on the chart here, we can see that the Qs are trading above the 20-day moving average, which is coming in at 611, and above the 50-day. They're pretty well glued together here at 608. So it managed to get back up and above those. Again, looking down here, we can see the 200-day moving average is down here at 545. So like the SPY, like practically everything else in the market, the Qs rolled over. You can't see it on this chart in April of this year and dropped to an April 7th low. You can't see it on this chart at 402. Then rebounded, bounced nicely, and like the SPY and a lot of other assets, rose walking up this 20-day moving average all the way up, kept on going for months and months until October. It lost a little bit of enthusiasm here. Then it quickly turned around and popped up here again to the all-time highs at 637. From there, it moved back down 585, right down here to 580. Hit the 50-day moving average, just like the SPY does. Bounced back up, but while the SPY is a little, calmer, the Qs do everything with great drama. So they don't just drop down nicely; they fall down to the 50-day moving average, then jump back up, and then fall back down. Down to the 585 lows that we had here from last week or the start of this week. Thank goodness there was, and this is up here at 588, so it's not exact, but there was a bit of support here from those October lows. So we're coming in again here at 585 for the low here. And then after we got down to this low at 585, then the Qs moved back up here to where we are now at $619. So going forward into next week, we do have a lot going on, as I've already mentioned to you, but we do want to keep an eye on on these prices here, on the current prices. So potential support here right now, nearby potential support is, of course, the 20-day and the 50-day, right where they are at 608 and 611. So that's potential support there. And then moving down from there, we have, again, this low that I keep talking about at 585. That is very, very important. Now, from the all-time highs here down to this low, it's an 8% drop, not a 10%, which would be a correction. It's an 8% drop. And we've talked for months about the market taking a breather. And as you can see, in October and November, this is definitely a breather as compared to the march up the 20-day moving average that we had for so many months in a row. So yes, we've had a breather here. Now we have to see just how tough these buyers are if price does happen to move down a bit next week. So again, we have more potential support here down here at the 580, then down here at 560, then, excuse me, then down to the 200-day moving average at 545. So next week, as I said, maybe you fasten your seatbelt, and it probably is a good idea to keep an eye on your protective stops. Our final chart today is a daily chart of the Global X Uranium ETF, symbol EURA. It has 49 holdings. Top holdings include Cameco, Oklo, Uranium Energy, Centrus Energy, and Sprott Physical Uranium. Now, you will note this is an energy stock, so it doesn't trade the same patterns usually as the SPY or the NASDAQ do. It's a different thing, and I'm kind of doing that on purpose right now to look in another place, although uranium is a very important energy and reasonably orderly in its price pattern right now, which I like. Now, when I captured this chart today, the URA was trading at $45.33. As you can see here, it's trading just below the 20-day moving average, coming in at about 46 and change. Above that, their inverse at the moment is the 50-day moving average, coming in at 49 and change. And then if you want to look on down with me here, the 200-day moving average is coming in at 36.63. So you can't see it on this chart, but we know that the URA made an April low at $19, then gradually rallied over the months, gradually rallied all the way up to this all-time high up here at 60, and that was in October. Almost everybody made this October high and then backed off a little bit. Then it came down here to 47, then it went up to 57, then it moved down here all the way down to our recent low here at 40. Then it rallied this past week to where we are now, again at $45.33. It has, if you look left with me here, the URA has pretty darn good price, and I'm not drawing a straight line here, has really good price support here, potential price support, I should put it, from August and September. And another thing that I've noted here, the fact is that it has been moving down here, very, very much so. It's been moving down, so I can draw that line down. But what it's trying to do here is break out. So I'm not going to jump into this, but if it can move down here and then it's back to price is back to where it was back in August, September, then it blew off some of the steam that we had from those prior months. So I'm going to see here if the URA can hold that price support from August and September. If it can break out of this down move, I think it could be good. So in the coming week, again, it could be hectic, but if the URA can stay above 41, if it can stay above 41, which is right about there, if it can stay above 41 in the coming week, I will buy a small position in my trading portfolio. I'm going to put in a pretty tight stop here at $39.75. Now, when and if the URA can climb above $47, and that will be right up here. If and when it can climb above $47, I will, of course, add to my position there, and my stop will be a trailing stop by then. So you may want to keep an eye on the URA in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. In my training program, How to Trade the Trend to Profit, it's definitely one of my favorites. You'll find out how to take advantage of strong stock trends so you can bring home consistent gains trade after trade. You will know precisely when to enter, how to manage the position, and when to take profits. Now, our new low price for this program is only $127. And by the way, some of my programs listed here are priced at only $59. And when you order, you'll receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you have unlimited access to learn at your own pace. So from our ever-popular 7 Steps to Successful Trading to How to Swing Trades Successfully, definitely one of the most popular programs. Again, Trade the Trend to Profits, How to Read Charts, 3 Winning Setups, another really good one, How to Bottom Fish Like a Pro. Discover how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen, or easier just click on the orange button below. Until next week, keep green on your screen. Be careful out there. I'm Toni Turner, and this is The Market Now.